welcome to today's episode of Asset Locator, where we empower real estate and business investors, brokers, and owner-operators to gather more leads for their business. We have a very special guest today and a great friend of mine. She is the founder of Tribute Lending Company, which is a mortgage advisor that assists home buyers with the borrowing and loan approval process from point A to point Z. I thought this would be very important for her to come on the show today with the current economic climate. She is an invaluable thought leader in this space, as it is becoming much more challenging to buy homes today. Please welcome Paula Schneyer.
Hey there. Thanks for having me. I really appreciate that.
Yeah, of course, Paula. Well, thanks again for coming on the show today. It's great to have you imparting your knowledge and your expertise in the space. Let's start off with learning a little bit more about you and your background.
Well, it's, we've bonded before. We both have a hospitality management background. So first job out of college was actually right here in our local space. I worked for an extended stay property for Marriott, made that about 9 months and decided the hotel industry wasn't for me. So I fell in the mortgage business and subprime lending 23 years ago, where I was a loan processor and remember selling 17.875 interest rates, and people complain rates are high today. Not. And we were helping people get out of bankruptcy and selling those with 5 points. So moved to New York City, worked briefly in the mortgage business in Queens, commuting from lower Manhattan, and figured out that there was a little too much fraud going on, that wasn't the place to be. So took a step back, got out of the mortgage business for about 6 months, and then went back into the business. I went to work for the largest broker in New York City, which was IPI Skyscraper at the time, which that group went on to forge mortgage it, all kinds of things. But I went to work as their top producer sales assistant. So it was a little bit of a wild ride. So I've done everything from processing, I'm going to talk with my hands. So loan processing, mortgage origination, broker. I've worked in large private banking, small banks, and now just with TLC Mortgage.
Wow, Paul, I thought that was such a great transition and point that you made about being in the hospitality industry and really getting your feet wet in that industry first, to now being able to found this lending company. And funny that you mentioned hospitality. The moniker for your company is Tender Lending Care. So I really thought reading that really had sort of a hospitality feel to it. And it kind of brings me to my hospitality days as well, being in Charleston and that being such a hospitality culinary city too. So I really want to thank you for sharing that. So let's dive more into the business aspect and into the company. What was your motivating factor and main decision to found Tribute Lending Company?
Well, I started exploring starting my own company 10 years before I ever did it. The absolute factor was feeling underappreciated and having gone through the transition of working for a smaller bank that got bought by another bank, that team left. I was tired of changing who I worked for or where I worked. People never cared where I hung my shingle or my business card. They cared about Paula Schneyer Mortgage Lender, because my book of business are relationships I've built over time. So I had followed my old team from a small bank to another small bank, and I'd been at the business for probably that bank for a little less than a year. And I wasn't there a full year, so I didn't get a Christmas bonus. And I had made them quite a nice amount of money on their profit. I was responsible for all my own lead generation, making my phone ring, and I didn't feel that they valued me. And when someone was telling me to show up at an 8 a.m. sales meeting, when it was a bank sales meeting and I'm a mortgage lender, where's my time? And for me, it's all about balance. So that was the key factor, is I was ready to control my own schedule. And there was something about the age. I was turning 40. It's like if I was going to jump off the cliff and do it, it was now or never. And I'm a big believer that everything has a season. And it was truly, my children were at the right age. I was at the right position from my having worked as different, large banks, small banks, different lending institutions. I had the relationships. I had all the knowledge I felt like I needed. I also had a really great support network, which is huge, whether that's a supporting, my husband's my business partner and his wisdom, the relationships, and everyone saying, go for it. So it took about 6 months to build the infrastructure I needed, whether it's the operating system, the phone system, the licensing, the credit checks, the doorknobs, before I actually finished out my pipeline where I was. And I left on great terms, because you never want to build bridges, because you never know who you're going to end up working with again or working for. So definitely just the stability of knowing that no one's going to fire me. I've never been fired from the mortgage business, but knowing what business card I was going to hand out for the next 10, 15 years would be Paula, Schneyer, Tribute Lending Company, TLC Mortgage. And I purposely, on my business cards, it doesn't say that I'm the president. It just says I'm a mortgage loan officer. I'd have to look at it. But yes, I joke, I'm the loan officer, the chief bottle washer of everything, because I do truly take it start to finish. Obviously, there's, IT is my support desk and things like that, which is, you just have to surround yourself. But yeah, that's my jumping off point, was just feeling underappreciated and knowing my value.
Right. So operationally looking at things, and you mentioned this networking, building relationships, not wanting to burn bridges. Well, this ties directly into the next question I had for you, Paula. In this case, there's a lot of players in this space. I mean, real estate, mortgage lending, it's an incredibly competitive niche, but you've obviously been able to set yourself apart from the rest of the competition. Tell us a bit about some of maybe the challenges and hurdles that you had to overcome to really get where you are and be established where you are today.
Well, one thing is I had to figure out who my client was. If someone calls me and their first question is, what's your interest rate? They're not my client. Because as I like to tell people, ultimately a mortgage broker or a banker, we get our money from the same places. We have to quote what's called a par interest rate. So one of the hurdles was just the confidence to know who is my customer. Is my ideal customer they're going to care about a very hands-on approach. They want a concierge approach. They want to know that they can pick up the phone or call me, text me, and I'm going to be able to get them direct access. I'm not passing them off to a loan processor. Here's an 800 number. So it's a little bit higher end, high touch experience. Do I work with first-time home buyers? Of course I do. A lot of those hurdles that I think I had to overcome were just the self-doubt of jumping off the cliff and taking your own business, work-life balance. The highest and best use of my time wasn't an 8 a.m. sales meeting about the bank. I already believed in the bank, but I believed in myself more. That doubt of, one of the beautiful things of lead generation, being able to turn down the volume. I know whatever I'm doing today, I'll see the results of 90 days out. Does that mean that I'm always going to be at 100%? Absolutely not, because sometimes I have to turn that volume down. I've always worked, even when I had my children, I turned the volume down. And I remember when Kendall, our oldest son, was 3 years old, and it was Mother's Day, and he was filling out the little questionnaire, Happy Mother's Day, what's mommy's job? And my job was to put Keaton to bed. Keaton at the time was an infant and I was nursing. I was devastated. Why would I be devastated? Because I struggle with, am I a business professional or am I a woman? A mom. Well, I'm a mom. And that was the most important thing I did right then, was put Keaton to bed. And that now is one of my favorite memories, that my oldest son missed mommy putting him to bed. But the fact I did turn down that volume, was I originating? Yes. But I think it helps me as I've grown in my maturity and my business and my confidence as a professional woman and business owner. I don't answer the phone. I take my phone and turn it over and leave it at the kitchen counter while we're having dinner, because I know the importance of family time. In fact, we were going to sit down and chat. It's like, no, I'm sorry. That's the one night a week my family has dinner together. And it's just understanding that season too is going to be short, and honoring and focusing on the time you have at that season. So I would say my biggest hurdles were more personal than professional. I'm very fortunate to be in a capacity as a mortgage lender. There is no, quote, glass ceiling. I've had some amazing mentors. I also always align myself and know I can go back and ask people questions. And sometimes it's a hurdle being by myself. Last year, that was a hurdle for sure when we have the capacity that volumes we were doing that people haven't seen. It's knowing my worth and saying, I'm sorry, I'm at capacity. If you're a past client of mine and every phone call is 45 minutes to explain something, I've explained 3 times, always happy to answer your questions. Being able to overcome some of those and knowing where to pull resources are definitely hurdles. If you're a brand new in the mortgage business, are there successful people that walk in and become mortgage brokers? Of course there are. Are there young people that come in? You have to have that burning desire. Finally, once I had that desire to start my own business, I had those resources. And I can tell you the key people, like my account rep for one of my investors, Julie Jacquard with Flagstar. She helped me with a lot of the compliance, having the compliance manuals, the HR manuals, what happens if there's a terrorist attack in your office? Well, I've actually been through that. So going through all those hurdles, there's a lot of moving parts. I mean, for example, you have to learn that, I have to have a separate lock on my home office door, internal office to my thing. So I would say the hurdles have been more personal than professional because I'm really good at finding what people are good at, tapping their knowledge and pulling in those resources. But just some of it's maturity of being a young mother and struggling and then going into a business ownership and trying to make it perfect when it's not going to all be perfect, and you learn as you do. So,
yeah, that's a really good point, Paula. And I really appreciate the fact that you mentioned having that personal, all-encompassing knowledge really helps in your professional life. You always think about professionalism as being just strictly business and knowing everything and knowledge is 100% of the power. Well, it's not really, because one, I think more of it really has to do with the relationship building, how good you are personally with other people, as opposed to just strictly keeping it professional. No one really wants to keep things strictly professional. It's like what you and I do in our team networking group, and we have those great interactions with those people, and we're able to do more business with them because we know them on a personal level.
Well, and we were talking about this earlier off camera. We were talking, I'm a big believer that everyone has a story. And one of the things that I really take away from my youth is my dad does not meet a stranger. He will ask anyone anything. Well, I'm a little better in the fact I have a little bit better filter than he does, because some things obviously are not appropriate. But it's just getting to know you. How many children does that person have? Where are they from? It amazes how many times I've cross-connected things. I think I recently shared with you a story, or maybe I haven't, of I made a great new friend. She's British and her husband's Czech. Turns out we're related. Our families are buried in the same rural cemetery in Central Texas. And it took me about an hour and a half to connect the dots. So wait a minute, we're related. But it's also finding that common connection. I have a few clients I quote feel like I've grown up with them. One of them, we joked that every time they bought a house or we did a refinance for them, one of us was having a child. So, and that's the magic of relationships and growing your portfolio or your book of business, is you're going to have those repeat clients. And if I didn't have the ability to learn your story, I would still be sitting at the bank letting the bank make my phone ring.
Right. So, Paula, besides being a networking rock star and a hardworking mother at that, what separates yourself and what differentiates yourself from most other lenders?
It's all about the personal touch. I am very unique in the fact that I'm the first person that a borrower will speak to, whether it's on a phone call or a text message. And then I take them all the way through the loan processor. I process the loan. I submit their loan to underwriting. I clear the conditions. I work with the title company to balance the closing disclosure. And oftentimes I'm the one that orders the closing documents from the doc prep attorney through the investor. So I truly walk them through the process. They are updated. They know where they stand, and they're not getting passed off to 3 or 4 other people. Here's my assistant. Here's my 800 number. It is just a little bit. I'm a control freak, so I like that, being able to take control of the whole start to finish. And that works really well for borrowers who appreciate high touch, high personalization. So you're not going, and the ability to shop as a mortgage broker, to go see, okay, let's talk about how long are you going to be in your home? What's your comfort level? It's taking the loan and saying, okay, these are the loan options we can look for. Now, who has the best rate? Well, they may have the best rate, but hold on a second, you're self-employed, and these underwriters at this investor are going to be a lot more friendly to you than this investor. So it's being able to understand what think banks that I deliver and close and fund a loan to, what's the right fit? Because what works for you, palette-wise, may not be the same for someone else. So that's one of the things that really excels, is just understanding the overall mortgage business and where to place a loan and how to package it.
Right. So, Paula, looking through your various accolades and different achievements over your 23-year tenure, look, being recognized by D Magazine is no small feat in and of itself. That took a lot of hard work and commitment on your end, but not only were you able to use that accolade to propel and grow and scale your business, you have these different networking capabilities, such as the networking group you and I are a part of, to really boost your credibility and build your brand and take that to the next level. So, in a theme similar to the nature of our podcast, what are some ways that you like to use to gather more leads for your business?
Well, I'm a big believer in repeat business. I don't buy leads. I am word of mouth, by referral, but I also believe in going deep. And relationships are everything for my business. I always think it's important to be part of it. I focus my networking energy on one group. I've been part of our team networking group for 7 years. And it's you never know where those connections are going to come through. That was through a mom connection. Community is everything. I'm a real big believer in giving back. So it's involvement in asking those right questions. So I would say gathering leads. Yes, there are certain seasons and markets where I'll help work open houses for realtors, or I'll, go back through and search through my past clients and make sure that we stay in touch. And then we're like, how's it going? How's your daughter? How's Susie doing in her acting career? Oh, I see Johnny's about to graduate. Wow, I remember when Johnny was in first grade. So it's going through those seasons. And for me personally, I found that breaking down the barrier between my work and personal lives overlap. One of my friends coined it getting financially naked in front of me. So I don't really look at leads the way that a lot of people do, in the fact that I'm always out there building new relationships. For example, today I went to a brunch for an hour this morning, and I spent an hour talking to a group of younger moms. I'm going to be their mentor for a MOPS group. And what does that have to do with the mortgage business? It has everything to do with the mortgage business, because that's a group of 10 new moms that I did not know, that I get to give back on a personal relationship, but they also get to know me. Paula Schneyer Paula's a working mom. She's TLC mortgage. And does a mortgage business topic come up? Of course it does. Oh, Paula, I wish I would have known you a year ago when we moved here from Canada and that we had to do this type of loan. Absolutely. Here's what you could do. Here's how you prepare it. It's planting seeds. That's how I go about getting my leads. I know that seed it may have to stay dormant for a couple of years, but that will come back to me tenfold, time and time again. So
that's something that I really learned as I progressed in commercial real estate. It's so daunting on a young professional to have to wait for a paycheck for an entire year, for potentially 2 years to 3 years for other for other brokers that are in the space and are just getting their feet wet. So I think that's a really good way to approach it. And I've learned how to do that just like you have been so good at doing. And planting seeds, again, bringing back the personal standpoint to the professional standpoint. Professional relationships come from a professional standpoint, or from a personal standpoint initially. You have to be their friend before they trust you with multi-million dollars or thousands or hundreds of thousands of dollars. So
well, it's a very personal investment. Buying a home is the largest purchase most people will make, but it's also it's me keeping the balance of time for family work-life balance, but it's also running a business like a professional. Just as you probably have to do, is I know as a mortgage professional that I, first of all, have to keep a decent savings account in case I have loan issues that I had to buy. I never want to buy a loan back, and that hasn't happened. But you always want, that's the other advantage of knowing your customers. But the other thing to really consider is there are going to be seasons where I'm working 12 and 14 hours or 6 days a week. And that happened last year. It was exhausting and physically draining, but you put away and you save yourself. So as a business professional, that's one thing I've done very well is I pay myself a salary. So as I've built my business over the last 5.5 years, I didn't make much maybe that first year. I saved it, and I did make five. It's just built itself back up. But I also knew that there would be a growth mindset, and you have to prepare for those dips and know that, obviously some people, you want to stay at that highest level all the time. But I'm also very pragmatic. Life happens. What if I'm sick? What if my kid gets hurt? What if anything? You got to be prepared for the best and the worst scenarios. So I always like to say, make hay while the sun is shining. And so that's very true. That has helped me not worry about as much of those lead generation, but I'm always in lead generation mode. I'm always building those relationships. I see every time I meet someone, it's like, okay, who are they? Who do they know? Where are they from? And I genuinely care because I find people fascinating.
So, Paula, looking through your website, which is awesome, by the way, it's super interactive. There's a lot of great tools on there that are so helpful for home buyers or first-time buyers in general. For example, some of the calculators on there, like renting versus owning, prepayment savings, refinancing, etc. Tell us how some of those tools can shape our decision, say, as a home buyer.
Well, first and foremost, so many people either they go full speed ahead and think, I got to buy today because I need to own a home. And that's great. Everyone should own a home. But sometimes it's all about, okay, let's really take a moment, or people get obsessed about what's my interest rate's not as low as it could be. I always tell people, let's have a conversation and let's see, does it make sense? So I think tools like that are imperative. The more education, the better. For example, if you do what if I pay a little extra on my mortgage? You'll be astonished at how much you can save. If, you take an average, I always coach people, you take one extra principal and interest payment a year, we'll take a 30-year mortgage and pay it off in about 22 years. Wow, you just shaved 8 years off. But then I also get people that come to me and go, well, my rate's at 4.25. Okay, well, how long are you going to be in your house? Are you going to be in your home for 2 more years? Or are you going to be there for 20? If you're going to be there for 20, then let's look at a refinance. What's your break even? How much is it going to cost you to refinance? So I had those conversations a lot the last 2 years, because what you saw previously 10 years ago is when rates started dropping, people were habitually refinancing, and brokers or even mortgage lenders got a bad name and a bad rap because there was no benefit to the borrower to refinance. They were churning and burning. And I'm really against that. I think it's important of like, okay, here's how much it's going to cost you. What's your break even? But this helps the consumer calculators like that to do their homework, to feel like that they're making the right decision. I mean, sometimes you as a young professional, maybe you're only going to be in Dallas for 3 years. Do you really want to buy a home at the top of the market? I mean, honestly, I'd really have to think about, where am I going to be? There's nothing wrong with renting. I lived in New York City. So what I wasn't going to buy. I knew I was going to be there 2 years. Was my rent expensive? Sure, it was $2,650, 25 years ago. But I also didn't have the capacity to buy something either. There's nothing wrong with looking at evaluating renting or buying, but also what's your comfort level? Someone comes to me that my dad just turned 75. Sometimes that individual, and you can't discriminate based on age, that person really wants a 30-year mortgage, not a 15. Is there anything? No, there's nothing wrong with that. That's actually smart because cash flow is everything when you're on a fixed income. As I always joke, you can always pay more, you can never pay less. So calculators like that on the website empower you as the consumer to do some homework, to hopefully it makes you think about the question that you didn't even think to ask. As I tell my borrowers, there are no silly questions. Please ask. I want them to understand. And I'll explain myself to someone 3 or 4 times in different ways till they feel comfortable with it, as long as they're respecting my time. But to ask me the same question, most people just want to know. And they want someone who will take that time to explain it and to educate them so that they feel like they're making an informed decision.
There are also a lot of different loan structures and term sheets that can get put together for the home buying process. There's FHA, lending, conventional, government, adjustable, fixed. In your experience, what are some of the loans that you've worked with a lot or that you also recommend to home buyers, especially maybe in today's market, for example?
Well, that's a loaded question. I mean, honestly, I would say that 90% of my business the last several years has been conforming, which is a conventional loan. And some of it will go into a jumbo space, which is now a jumbo loan is anything over 647,201. That number blows my mind. For so long, that number was 400,000. And that was a big loan in Texas. And now we're here in DFW and we're seeing values go up. I think every loan, first of all, someone's a vet and they're in Texas and they've never had a VA loan, and they're better off keeping their savings in the bank and doing a VA loan. That becomes a disadvantage on a highly competitive market because a lot of times sellers don't want to do a VA or FHA loan because they have stricter guidelines from a lender perspective. So it's really about what's the market doing. We're going to start seeing more VA and FHA loans. So FHA loans, a fabulous program. If someone has a minimum down or they need a gift, I'm a huge fan of FHA for that. The mortgage insurance is not cheap, but it's not that expensive either. It's all about what does your individual scenario look like? Have I done an adjustable rate mortgage? I just locked the first adjustable rate mortgage that I've locked in probably 10 years. Now, does that mean I don't sell them? Of course I sell adjustable rate mortgages, but rates have been so low for so long that an adjustable rate mortgage has been more expensive than a 30-year fixed. So there's no value in a 30-year fixed. Where we're seeing ARMs come into play slowly, they're a little bit better on the jumbo world than they would be on a 30-year fixed. It's all about what's the market commanding. The ARM I just locked is a jumbo new construction. It's a 180-day rate lock. So that longer the lock that we have there, we're hedging that money for longer. So that's why the ARM made sense at the time. I think adjustable rate mortgages are going to come back into play more and more in the next 2 years. And they're so much safer than they were 20 years ago. I mean, what you saw is you hear stories from the 1980s where ARMs were adjustable rates and they had negative amortization 25 years ago, even 20 years ago. You're not seeing that. I mean, what you're going to see is for the most part, very common is a 5-year ARM, a 7-year ARM, or a 10-year ARM. That means it's fixed for that amount of time. And where ARMs really come in and win is they have built-in parameters to protect the consumer. I'm not going to go into all the details of how an ARM works, but I always tell people that one of those adjustments follows what the current market is doing. And a lot of times people will win on an ARM when higher fixed rates are at a higher perspective. So I actually remember refinancing my own personal mortgage from a 30-year fixed into a 7-1 ARM. Because I knew it just made sense from a rate perspective. And the amount that I was saving, I could pay extra towards the principal.
So what have the rising interest rates, because we've talked about this before, we were seeing in the late 80s, early 90s, double-digit figure interest rates, and now people are complaining about 6% onwards, with the Fed talking about rate hikes. Could see in the sevens, and God forbid higher than that. What have you seen these rate hikes do, and how have you seen that affect the lending market as a whole?
Well, first of all, people are a lot more hesitant right now. But one misconception is that if the Fed raises interest rate, that mortgage rates are going to go up. That is not true. Mortgage rates are long-term rates. Does the Fed impact it? Sure. Mortgage rates change every day. Sometimes they change 3 or 4 times a day. People don't always realize that. We saw rates in the 6s in June. What I'm seeing over the last 90 days is it's like a bullet train ran off the coast and it just kind of slowed down. Does that mean that rates are bad? Rates are phenomenal. A 30-year fixed right now is running about 5.5. Am I seeing things seasonally adjust? Yes, I'm seeing people consider buying down the rate, quoting discount points. Is that a bad idea? Absolutely not. Was that a bad idea when rates were at 2% on a 15-year fix? Yes, it didn't make any sense because you could only get so low and rates were so compressed, the yield spread premiums and stuff. Does it make sense now to buy a discount point? How long are you going to be in your home is my question I'm always going to ask. If this is your 30-year home, absolutely look at it. Does that mean that you're going to get all your money back? Not necessarily, but if that payment is more comfortable. But while people are taking a hesitation and there's a little bit of training for people that are first-time home buyers and rates are not high, let's talk about what my first rate was when I bought my house in 2002. And oh, by the way, I signed the contract the week before 9/11. Or, ask your parents, your grandparents, what was the interest rate on their first home? And sometimes when you just educate the first-time home buyer or have the reality check with the person who's buying another home, it is a mind shift. It's a mindset shift. It is adjusting to what the new real is. But in some ways, the market is healthier for the home buyer as well, because you're not seeing 50 offers and having to offer $150,000 above list price. And I'm not having to coach people about short appraisals as much. I'm seeing the seller paying for the owner's title policy again, which is typically a seller pay closing costs in the state of Texas. So we're seeing, it feels like it just came to a screeching halt. Things are still moving. People are still buying properties, but you're not having to write an offer on something you haven't even seen before it barely even goes into MLS. So I'll take a healthy market. Does that mean I have to work a little harder? Sure, I do. Does that mean I'm, working 14 hours a day? No, thank goodness. Because most people in my mortgage business are exhausted. Are people getting laid off? Sure, they are. But that's very cyclical in the mortgage business. Another motivator to own your own company and to plan for, times of drought when you're standing in front of the water hose, so to speak. You plan for those times. But yes, rates are going to continue to go up. They actually will. They're kind of stable right now, in my opinion. We saw the spike up really quickly in, June was kind of brutal. And then they got better and they were down to 5 and now they're edging back up, probably 5.5 roughly. I think I looked at it today just to kind of give you an idea. But that's a phenomenal historically low rate.
I think you're going to like this next question. I have a very good feeling you are. Paula, any interesting stories that you care to share or care to entertain the audience with during your 23-year tenure?
Well, we were talking a little before we got together today, and there's some really interesting. I could tell if the walls could talk. By far for me, I mentioned it a little bit ago about living in New York City, 9/11, and that will always be with me. I was in the mortgage business. I was working for a gentleman named Michael Trombley, who at the time was the 30th biggest producing loan officer in the country. He was in Italy on vacation. I remember going through our entire client open files going, how are you? Who passed away? I remember one of my clients worked for Marsh McLennan, and his answering machine message said, "I was not at the World Trade Center. I am alive." because that was just the mood and what we were just in survival mode. I saw people walk away from $150,000 earnest money deposits on apartments because they didn't want to raise their small family in the city anymore. So that's definitely one of the most unique experiences in going through that. I was, 21 years ago. So watching people make shift decisions, and some of the parallels right now, because there's a lot of political instability and economic woes going on. Obviously, after 9/11, our country went through a lot of economic struggles, and we're seeing that right now. So I feel a lot of that everyone's kind of outwardly, we want to help everyone, but inwardly we're hoarding. We're not wanting to jump off the bridge and buy a house when the rate's 5.5%. We're hesitant, 6 months ago, we would have bought a house and paid $150,000 above list price. So I feel some of that coming in. I had a I just had a customer that had signed a contract to build a house last October. I said, you should go for it. They called you. You're on the wait list. This is a great opportunity. But there's that little clause in there. The cost of goods have gone up. That house went up $200,000. He walked away from a $25,000 earnest money deposit. Still a lot of money and proportionally kind of similar to that earnest money in New York City. But it's just people saying, I'm not willing to take any more chance and kind of sticking to their gut and trying just to keep their family and their economic wealth intact. So, I remember in the condo crisis, I worked for a large bank, and I remember someone being sold the wrong unit. There's so much fraud that goes on in the mortgage business. We have to go through a lot of training for that. We have to go through all the different trainings we do. I do 8 hours a year for continuing education. Plus I have to have red flag rules in place. So I'm always on the defense a little bit, but it's extraordinary what I've seen between, walking away from a company because their ethics weren't there to doing ethics training, but nothing will ever top 9/11. I hope not, at least. So
it's just such a wild and unbelievable part of our history. I remember it. I was a little bit younger, obviously.
A lot younger.
I remember in just starting second grade, and I just moved to Dallas when the trade center collapsed, and it was just such a crazy. It was unbelievable to see that on TV and everyone's reaction to it, and it didn't just shock New York; it shocked the entire country. It shocked the entire world, and not only that, it created such a crazy time in the market for lending in the real estate space. You were just saying people did not want to live in New York during that time. It was so uncertain. They'd never seen anything like that before. It's just unbelievable to think about.
Well, and we moved 4 times. We lived across the street from the World Trade Center. So we were in Battery Park City. So we moved out of our apartment. Obviously 9/11, we didn't get to go home that day. And, we moved back in the day before Christmas, and the day after Christmas, the moving trucks came and packed us up, and we moved back to Texas. And we signed a contract to build our own first home the week before 9/11, but we had to have a place to live. We were fortunate, the market was okay. The rates were not great, but we thought rates were fine because they were at 6.875. That wasn't too bad because rates had been a lot higher than that. So it's all about perspective. And, people that are relocating, sometimes it's hard to swallow when you're leaving and selling a house and you've got a 2 or 3% interest rate. That's hard to lose. But what are you making on that home? How much equity did you gain by owning that property? And where are you going? It's, just speaking to a lady today, she's like, yeah, we moved here from Ottawa and, we sold our house at a crazy amount and we bought higher than here and we were a little freaked out. She's like, but now we're not feeling, we're feeling pretty great. We've got 3,800 square feet, came from 1,400 square feet with 5 kids. It feels great. So it's all about that mindset. And, I've been seeing a lot of advertisement for marry the house, not the rate. And it's all about the way you're spinning it and the way that you're selling it. most people live in a house for 7 years or they sell or refinance it. I lived in my first home for 7 years. I kept it as an investment property. Then I bought my next house. I was there 7 years. Now I'm in my current house for 8 years, but this is the place I intend to finish my kids finishing school. And I used to say it's our 30-year house. And now I'm thinking maybe it's my 20-year house so I can downsize and retire. So,
Paula, we're at the point of the podcast now where I like to ask more personal questions rather than professional, just to really get to know our guests outside of their professional life. For you, what is your number one pet peeve?
That's such a hard question for me. And it's probably the ability to not finish things, or the inability. I'm married to an engineer and I've had 23 years of training in that. And for me, I'm a big task. There's a start and a finish. And I like to wrap it up, execute, finalize. That's me. So I have a hard time when things are not completed in a timely manner. That here's a project and let's think about it. Let's analyze it. I like to refer to it as analysis by paralysis. I would say that's my number one pet peeve. Borderline besides that's probably just not the kids not being tidy. But, I'll pick the speck off the table and look at it and see the dust and go back and want to clean it. But you grow from that. I mean, I always joke that my pet peeve is one of the things that makes me a really great loan officer is I speak engineer and deal with attorneys and CPAs very well because I have been married to an engineer who does approach things completely different than I do.
I already know the answer to this next question, but just entertain the audience, Paula. What are some of the hobbies that you enjoy outside of your work?
Well, definitely the one thing that I'm very passionate about is our entire family are avid scuba divers. So last summer was really cool. Our youngest son, who's 12, just got his certification fully. He was actually 11. He just turned 12. And our older son, who will be 15 this month, has logged over 50 dives. So I'm not a real athletic person. We don't ski, but we are scuba divers. So I'm close to probably about 175 dives. I also love the tranquility that brings. I do a lot of volunteer work, whether it's Boy Scouts of America, BSA, we like to call it now, or PTA, whatever my kids are in. I have a high school freshman who's playing the trombone, so I spend a lot of time as the band booster volunteer chair. But personally, if I'm not traveling or with my family, I really enjoy being creative. I do a lot of jewelry. So whether it's metalsmithing, leather, sewing, I call it my creative therapy. Our media room is my creative studio, besides some desk collectors called exercise equipment. But I like to find time and go up there. And then the other thing, I'm very passionate about music. I'm a huge, I don't really watch a lot of TV, but I will always have music going, whether Alexa and I are friends, and I love my Spotify playlist. So if you know me, my Spotify playlist usually can't even talk. My music playlist is a lot of Americana, a lot of just really good soul, Joni Mitchell, James Taylor, John Prine, Brandy Carlisle, huge fan of Brandy. So that's kind of what's going on, what I'm listening to, what I'm doing when I'm not doing laundry and doing dishes.
Well, Paul, I want to thank you so much for coming on the show today again and giving us a lot of your knowledge and experience in the space and telling us more about your personal life. So listeners, I've dropped a link below to TLC's website. Make sure to give it a look, and please feel free to call or email Paula and the rest of the team if you're just interested in the home buying and borrowing process, or if you're just curious about the market as well. I'm Nicholas Elwood, and thanks for tuning in to today's episode.